Warren Buffett is arguably one of the most well-known and successful investors of all time. But very few people have actually heard of his teacher, Benjamin Graham. Benjamin Graham is the author of The Intelligent Investor, considered to be the Bible of value investing, and many people know about Benjamin Graham, but a significantly higher number of people actually know about Warren Buffett and Warren Buffett's successful investments. But Warren Buffett was actually a student of Benjamin Graham. So how is it that the student has surpassed the teacher? In this video, I'm going to talk to you about Warren Buffett and Benjamin Graham and how was it that Warren Buffett actually surpassed Benjamin Graham as an investor. Additionally, I want to provide you with some insight, some ideas about how you can actually surpass your master, teacher, instructor, whoever it may be, and in whatever field it may be as well. But before we begin, please like, comment, subscribe to this video. I would really appreciate it. And without further ado, I will tell you how to surpass your teacher. Alright, so let's set the stage. It's 1894, and that's when Benjamin Graham was born. And he lived through the Great Depression. The Great Depression was, as we all know, a very difficult time in the United States and in the world. And the Great Depression came right after the Roaring '20s, a time when stocks were at all-time highs. And really, this was a time where almost nobody knew very much about value investing or just about investing. Benjamin Graham sought to correct this. He developed a rigorous mathematical, systematic, and conservative approach when it came to investing. When Benjamin Graham analyzed a stock, he would look for a margin of safety. He would look at the balance sheet. He would look at its liabilities, its assets, a lot of what we do today when we actually evaluate a company. And this logical and rational approach to investing was also something that Warren Buffett looked at. So much so that Warren Buffett has actually read Security Analysis and The Intelligent Investor by Benjamin Graham before he actually went to Columbia to be one of Benjamin Graham's students. So in the 1950s, Warren Buffett was a student of Benjamin Graham. He took his classes, he did exceptionally well, and actually had a very close relationship with Graham. So how did Warren Buffett surpass Benjamin Graham as an investor? And very few people have actually heard of Benjamin Graham outside of the investing world. Some of it may actually have to do with how the stock market was performing back in the day, back during the Great Depression, and even up to the 1950s, 1960s, even 1970s, around the time when Benjamin Graham passed away. But a lot of it actually has to do with some intrinsic ideas about investing that Warren Buffett had that Benjamin Graham didn't. Now, Warren Buffett was absolutely a value investor, lived and breathed the intelligent investor. He looked for a margin of safety. He analyzed the balance sheet. He looked for quality companies at a discount. He obeyed all those principles. But Warren Buffett did something else. Warren Buffett would also look for intrinsic value in a company that wouldn't exactly manifest itself on the balance sheet. He would look for these intangible assets, things that didn't have a price that could just be put on a balance sheet. And this was actually something that Benjamin Graham kind of overlooked when he was looking at investments. Let's take Disney, for example. And I'm not necessarily talking about Disney stock today, and I'm not making a recommendation to buy Disney. I am not a financial expert. I'm just a guy on YouTube who's just trying to share some ideas with you. But if we take the company Disney, for example, they have a balance sheet, they have their assets, they have their liabilities, they're making so much money, blah, 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 etc. But Disney also owns things, these intangible assets, such as the stories, like Snow White and Cinderella and Pinocchio. Disney has rights to those things. And even today, Disney owns things like Star Wars and Marvel. And these stories, by themselves, don't have necessarily a value that you can just put on a balance sheet as an asset or a liability. But Warren Buffett would look for companies that had these values. What value do you even put on the story of Snow White to own that story? So in addition to the fundamental analysis, the margin of safety, Warren Buffett would see value that was beyond just the balance sheet. The thing that most investors look at when they're analyzing numbers, when they're looking at the technical analysis of the stock ticker just moving up and down. Nothing but numbers, but very little in intrinsic value, intangible assets, and what they're worth. Very few people know about Benjamin Graham, and Benjamin Graham never was known as a huge investor because he didn't exactly see these intangible assets. Benjamin Graham just stuck to his principles from The Intelligent Investor, looked strictly at the balance sheet, looked at the assets, the liabilities, was the company profitable, and was it worth the price? And if it didn't reach that very strict criteria, even if it was a good company that would make an incredible amount of money in the future, Benjamin Graham wouldn't buy it. But that would be a company that Warren Buffett would buy. And as a result, Warren Buffett did very, very well. So I think there are many lessons that can be learned between the story of Benjamin Graham and Warren Buffett, between teacher and student, and how the student overall can surpass the teacher. Now, when I say things like this, I do believe that this applies to many, many aspects of life, not just investing, but if you're a martial arts master or a scientist, whatever you may be, whatever you do, you can end up surpassing who your teacher is in the long run. Additionally, when it comes to surpassing your teacher or instructor, you need to be in that field. Benjamin Graham and Warren Buffett were both investors. That was their job. That was their profession. It would be foolish for me to compare myself to my martial arts instructor because I am not in the business of martial arts. So the first thing that you have to do is you must be proficient in whatever material it is. If you're going to be a professor and surpass your advisor, you need to also have a PhD and go into that field. If you don't know those things, or if maybe you cheated on an exam, you really don't understand some of the fundamentals of that subject, there's no way you're going to be able to surpass your teacher or your master. One way to know if you have reached a level of proficiency in whatever subject it may be, you should be able to teach it. You should have such a fundamental understanding of that material that you can teach it to other people. That means that you're at least on the same playing field. So once you're on somewhat equal footing in terms of proficiency, you truly understand the material, that's where you need to start. The next thing that you need to do is be open-minded. Benjamin Graham was very conservative and strict with his investing decisions, and that helped him get through the Great Depression. But those principles that got him through the Great Depression is not the right mindset that you needed to be profitable and successful afterwards, in the 1950s, 1960s, etc. Warren Buffett, on the other hand, was younger, more open-minded, and his decisions were based on the fundamentals of Benjamin Graham's teachings, but expanded upon them to see value in things that were not as rigid as the balance sheet on the company, but to find value in the intangible assets such as the story of Snow White in the company of Disney. And truthfully, these two fundamental ideas, both having a proficiency, being able to teach the content, as well as being open-minded and expanding upon that content, is the primary way you're going to surpass your instructor. And this idea of surpassing your teacher or instructor is one of how you overcome a different generation. In general, I believe that new generations of people will always surpass their older generation counterpart. And I know there are many people who criticize the baby boomers and the greatest generation, the millennials. These millennials are so entitled. Back in the day, I had to walk 15 miles to get to school, carrying a sack of books and rocks. Yeah, every generation has problems. But a generation always arises to tackle the challenges that are present to them now, in the moment, in the time. Yeah, maybe a millennial doesn't know how to do certain fundamental tasks that, yes, the baby boomer generation had to deal with, but that's because those tasks might be irrelevant now. And it's more worthwhile that we take on these new challenges. And every generation has to grow from the foundation that the last generation brought. I remember seeing people say like, oh, people can't do, math in their head because, they have to use calculators. They just can't do math in their head like we used to. Well, that may be true. But being able to do math in our head is somewhat irrelevant now because we have calculators. And yes, understanding the fundamentals of where this math comes from is important, and hopefully most of us know it. But using a calculator to solve higher level problems rather than doing it all in our head is a better use of our time. We try to use the best tools that we have available today to tackle the problems that we have to tackle today, regardless of whether we've become soft or weak. And perhaps there is some validity to some of these things. But I always believe that every generation grows on the foundation of the previous one. Scientists do science based on what's previously understood as the foundation and build upon it. And then new generations will build upon that. And sometimes new generations will look backwards and say, hey, there were some problems in the past. There is also another concept that's buried within this that I would like to mention, which is known as the appeal to nature or appeal to history fallacy, which is the idea and concept that things in the past, just because they were in the past, are inherently better than things that they are now. And even myself included, I glorify Benjamin Graham as the father of value investing, the person who wrote The Intelligent Investor, this great seminal work. And no doubt, he's very good, highly accomplished. But we should be very mindful that Benjamin Graham had to deal with issues that he was dealing with during that time. He had to deal with the Great Depression. That was just a thing, and he came up with the best solution considering the resources that he had at the time. Warren Buffett made his investing decisions based on what was present at the time, and that he could see the inherent and intrinsic value. So when it ultimately comes to surpassing your master, your instructor, understand the fundamentals, develop a solid foundation, but then be open-minded. Build upon that foundation. And if you can do that, you will surpass your master. I hope you enjoyed this video. Please like, comment, subscribe. Really appreciate it. And I'll see you soon.